Hello, this is Andrew here. I'm the director at Consult-Myanmar Company Limited. This is the second video in a two-part series on investing in Myanmar. Today, we're going to talk about Myanmar Company Incorporation, what you need to know. In the previous video, we discussed about the key legal framework in Myanmar and the industry sectors that are reviewed by the new legal framework. This new legal framework gives foreign investors the opportunity to hold controlling interest in their investment in Myanmar by 100% ownership or via a joint venture. If you have not watched the previous video, please go to part 1 video now, as the investment strategy you adopt will decide on the type of investment vehicle you use. The company incorporation is that vehicle that you decide to use once you have decided on your investment strategy. Let's start with part 2 video, Myanmar Company Incorporation, what you should know as an investor. In this video, we will focus on the Foreign Investment Law and the Myanmar Companies Act. As a foreign investor, it is important that you understand the objective of the Foreign Investment Law, as we want to invest responsibly by focusing our investment into areas that are profitable for us, at the same time is beneficial to the Myanmar people. The Foreign Investment Law outlines what are the long-term objectives that the Myanmar people want to achieve in order to take the country forward both economically and intellectually. One of the key objectives of the Foreign Investment Law is that of economic development of key industry that the Myanmar government considers to be crucial. Especially important are those sectors that create employment, export promotion, and import substitution. The Myanmar people want to catch up with its neighbors like Thailand, Malaysia, and Singapore. They do not want to be left behind in terms of economic development. The Myanmar people realize that years of sanction have left the country both isolated and stagnant. The government realized that in many sectors of the economy, Myanmar people do not have the technology, management know-how, or capital necessary to fully exploit those segment or industry and to bring it to an international level quickly. Example will be operating deep sea oil and gas exploration platform or running a 4th generation mobile network. That is where the Myanmar government feels that foreign capital, technology, or management know-how will do the most good. The Myanmar government is keen to develop the remote region of its country. For example, if you can invest in a factory that will create employment in the remote and poor region of the country, the MIC can even look at extending the exemption and relief that you receive for a longer period. The Foreign Investment Law provides the legal framework for foreign investors to invest in Myanmar. In it, the role and responsibilities of the Myanmar Investment Commission or MIC is defined. The MIC acts like one-stop shop. It is vested with the power to review all investment proposals that foreign investors submit. The MIC will coordinate with all government ministries to ensure that all investment proposals are treated in an expeditious manner. The MIC can approve investor proposal and will issue MIC permit. It can also extend the benefit if investor invests in remote region, thereby creating employment. And the MIC can also impose punitive measures if investors do not abide by the term of the investment agreement. Let's go through the 3 key benefits that foreign investors will enjoy when they invest under the FIL scheme. I call these 3 benefits the 3 pillars of fruitful investment in Myanmar. The first pillar, and one of the most important that foreign investors enjoy under the FIL scheme, is tax exemption or relief. For capital-intensive and export-oriented industry, this first pillar is extremely attractive as it reduces the manufacturer's tax liability significantly. As the investor gets income tax exemption for 5 years, exemption from income tax for profit reinvested into the business, accelerated depreciation on capital equipment, 50% relief on export income, exemption from custom duty for import of capital equipment, exemption from duty for import of raw material, and for foreign investors that invest in remote region and create employment there, investor can request for extensions of the benefit beyond its stipulated period from the MIC. The second pillar is the right to use land. Under the 1987 Restriction Act, foreigners are not allowed to buy or own land in Myanmar. However, for foreign investors that are in the export-oriented manufacturing under the FIL scheme, they can easily lease industrial land from the government for up to 50 years, and if need be, they can apply for 2 10-year extension on the lease. Foreign investors can also lease land from private landowner with the approval of the government. This is important. For example, if you are investing in, say, building 10 supermarkets in Myanmar over the next 3 years, and you need land of at least 5,000 square feet for each site in order to run a successful supermarket. And your Myanmar JV partner already own prime land in key cities in Myanmar that can be used for that purpose. The local partner can lease the JV company the prime land as their contribution to the joint venture. If you are willing to invest in remote region and create employment there, the MIC is willing to look at extending your lease to a longer period. The third and final pillar is the guarantees that the government gives to foreign investors under the FIL scheme. The government guarantees that your company will not be nationalized during the term of the FIL agreement. They will not suddenly terminate your company's permit to trade unless you are breaking the law or violating the terms of the investment agreement. On expiry of the contract, you are able to remit your profit out of the country after paying necessary taxes and liabilities. There are currently 3 business classifications used by the Myanmar Companies Act. They are industrial, which is for business involved in manufacturing; services, for business such as consulting, design, and advertising; and trading, which is import-export business. Take note that trading is reserved only for Myanmar citizens. Foreigners cannot be involved in trading. Remember that one of the purposes of the FIL is to develop industry that Myanmar people do not have the technology, management know-how, or capital to develop. As trading is a low-tech business, this is an area that foreign investors cannot participate in Myanmar. Incorporation route. For foreign investors who are incorporating a company in Myanmar, they have an option of incorporating with FIL benefit or without FIL benefit. For capital-intensive industries such as export-oriented manufacturing, where it is normal to invest $2 million and above on a factory, it makes sense to incorporate under the FIL scheme and enjoy the 3 pillars of benefit that we discussed earlier. In the case of JV, such as building a chain of supermarket, it is also very capital intensive, so it makes sense to invest under the FIL scheme. So the FIL scheme is ideal for capital intensive industry. For non-capital intensive industries such as service industry, like consulting, design, advertising, whereby the capital invested may not exceed $50,000 US, if you are able to break even within the first year of operation, it makes sense to incorporate without the FIL benefit, as most of the sales are generated locally. Investors that want to station staff in Yangon in anticipation of the Myanmar government opening up their sector for foreign investment, like what we have seen recently in oil and gas industry. Under such circumstances, the foreign investor should just open a branch of a foreign company. That is, the shareholder is a foreign company that is incorporated overseas in his home country. Take note also that to incorporate a company with limited liability, you need a minimum of 2 shareholders. Therefore, to incorporate the company under the Myanmar Company Act without the FIL benefit is suitable for companies that are in the non-capital intensive industry. This table here shows a quick summary of the difference in the benefit that the foreign investor enjoy when they invest under the FIL scheme and when they invest without the FIL scheme. As you can see, capital intensive industry that qualifies to invest under the FIL scheme, the benefits are substantial. So how do you proceed to start a business in Myanmar? There are 5 questions that you need to ask yourself. First question, is it reserved for the state-owned economic enterprises? If it is in the reserved sector, you must either propose a JV with the state or wait for an open tender to be called by the relevant ministry. Is it in the restricted industry? If it is in the restricted industry, you need to ask yourself the following question. Do I need a JV with a local? What is the role of the local citizen? Normally, the local provides land, manufacturing or service facility, distribution or sales. Which government ministry must I get approval from? For example, if you want to invest in a hotel, you need to seek approval from the Ministry of Tourism. In the restricted industry, always find out what is the minimum criteria set by the relevant ministry if you want to get your investment proposal approved quickly. How do I get access to land? Do I lease industrial land for 50 years direct from the government, or is the local partner going to provide the land? JV consideration. Sourcing for a suitable local partner is a major problem for many companies going into the reserve sector or the restricted industry. In these segments, it may be mandatory to partner a local citizen or enterprise before you can participate in that industry or sector. For example, in the banking industry, if the government were to issue, say, 4 international banking licenses via a beauty contest at the end of the year, and the international banks need to partner a local bank in order to be able to bid for one of the license. The number of strong private Myanmar banks that have good network of branches in Myanmar can be counted with the fingers of one hand. You have the usual suspect: KBZ Bank, AGD Bank, CB Bank, Ayawadi Bank. The number of potential international banks that will participate in the open tender will probably be more than 20. About 75% of the applicant will be left without a partner and thus fall out of the race. Finding suitable land. For export-oriented manufacturing that are under the FIL scheme, they can lease industrial land directly from the government in one of the many industrial parks around Yangon. For industry where location is important, such as retail or hotel, getting access to prime land that are strategically located is a challenge. Ideally, in this industry, the foreign investor should partner a local citizen or enterprise that already own prime land in the key location that they want and can lease those land to the JV company as part of their contribution to the JV. The decision to incorporate the JV company either in a tax-friendly country like Singapore, which has double taxation agreement with Myanmar, or to incorporate locally within Myanmar has implication on how much tax you pay. This is something that you need to consider carefully when the JV company is being set up. Due diligence. Bigger companies in Myanmar, such as bank or telecom companies, will have annual audit that are more in line with generally accepted accounting principle, otherwise known as GAAP. However, for smaller Myanmar company, it is common for them to have two sets of books, one to show the income tax department, the other for their own shareholders. Standard like GAAP may be loosely interpreted in Myanmar, so performing due diligence is a challenge in Myanmar. On top of that, US company must also vet the background of their potential JV partner to ensure that they are not directly or indirectly controlled by people that are on the US sanction list. The challenge is that most business tycoon in Myanmar are on the US sanction list, which would imply that US company can only partner the small businessmen in Myanmar. This severely limits the chance of success in bidding for a license when it comes to capital-intensive industries such as oil and gas, banking or telecom, where you have a higher chance of getting a license if you partner with a local tycoon. Under the FIL, dispute resolution mechanism can be contractually agreed upon between the parties. If no such mechanism is provided for in the contract, Myanmar law will apply by default. Further, if the FIL conflict with international treaty or similar agreement approved by the Myanmar government, the terms of the treaty or agreement will prevail. Take note that the Myanmar government just became a signatory to the New York Convention. This allows party to a contract to stipulate that future dispute between the partners will be arbitrated in a neutral arbitration center such as Hong Kong or Singapore. As to how the law will be enforced in Myanmar is still not clear. For example, if there's a dispute between a foreign investor and his Myanmar JV partner and is arbitrated in Singapore, if the arbitration court grant an arbitral award in favor of the foreign investor and the Myanmar partner is not happy and dispute the arbitral award in the High Court in Myanmar, we are not sure how the Myanmar High Court will handle the case. Will they accept the arbitral award passed by the arbitration court in Singapore, or will they side with the Myanmar company? It is not clear at this point in time how the mechanism for enforcing arbitral award passed by foreign arbitration court will be implemented by the court in Myanmar. So what are the risks of investing in Myanmar? There are 4 risks you need to be aware of: political, social, economic, and reputational. If the political reform in Myanmar fail, we could see a rollback of sanctions that was just recently lifted by the West. On 20th May, when President Thein Sein visited the White House, he pledged to institutionalize the reform and to hardwire it into the legislation so that it is irreversible. But if political reform fails, what we will see is this: companies are not to do business with Myanmar government. This was a campaign that ran in Australia in 2009. Don't deal with the Burma campaign. Companies that have invested in Myanmar are asked to pull out of Myanmar. This is the scene outside the French embassy in London in 2009. The protesters are asking French oil company Total SA, which operate the lucrative Yadana gas project, to pull out of Myanmar. Social risk. Myanmar now is very democratic. 16 newspaper licenses have been granted to private companies. In fact, too many licenses have been granted. The challenge now for private newspaper is how to build scale readership and hopefully survive as a private company. Myanmar people now are very vocal as a result of the political reform and their newfound press freedom. People protest whenever they feel injustice have been done to them. For example, if they feel that there's a land grab by government official or big companies and they have been unfairly compensated for vacating their land, they will protest. If a factory is built near their village and they think it pollutes the neighboring farmland, they protest. If they work in a factory and they think that their pay is too low, they will protest. So foreign investors that invest in oil and gas and mining run a higher risk with issues like environmental pollution. Foreign investors that invest in large garment factory that hire tens of thousands of low-wage workers run the risk of industrial actions due to demand for workers for higher pay. You are faced with perennial power shortages in Myanmar. Factory cannot have large-scale 24 hours manufacturing without constant power supply. Then there is the reputational risk. If a company invests in the Rakhine state where there are communal violence between the Buddhist and the Muslim, as a result, you have to strengthen security and run the worksite like a military camp in order to secure your worksite. If for whatever reason some NGOs start to publish papers saying that your company is in cahoot with the military to oppress the local people, it may tarnish the reputation of your company. Similarly, if you are involved in jade mining in the Kachin state, this is the battleground between the Myanmar army and the Kachin rebel. If you are Sumitomo and you invested in building the Tilawa Special Economic Zone, due to accusation of land grab by government officials and inadequate compensation to the farmers and villagers that had to give up their land, your reputation as a responsible corporate citizen could be tarnished. Partnering cronies. Similarly, for capital-intensive investment in the reserve sector or the restricted industry, it is sometimes necessary to partner one of the business tycoon in Myanmar in order to get access to prime land or have a partner who can carry his own weight. However, should the political reform stall and there's a rollback of sanction on Myanmar, your company may be accused of partnering a crony. Corruption. Like all emerging markets, the Myanmar civil servants are poorly paid. A department head in a government department makes less than $300 a month, but they are responsible for giving approval to foreign investors for projects that may go into millions of dollars US. There's always this temptation to take gifts or incentive from foreign investors in order to give insider information, speed things up, or to turn a blind eye. This problem is not unique to Myanmar, but is prevalent in all emerging markets. Foreign companies that bid for big infrastructure projects are especially susceptible to this problem, as it is a zero-sum game and there's only one winner, and the payoff is huge. My last slide. I would like to let you know that Consult-Myanmar Company Limited is a 100% foreign-owned company that is incorporated in Myanmar. We are a member of the Union of Myanmar Federation of Chamber of Commerce and Industry. If you have any questions about the market opportunities that I've just covered in my presentation, please do send me an email or you can visit our website. Before we part, I would like to wish you a fruitful and profitable investment experience in Myanmar. Goodbye.